Hello, fellow traders. 'Tis I, the rumpled one, coming to you Thursday, July the 3rd. The year's 2020. Let's talk trading. Time for the weekly wrap up. Let's see, yesterday was NFP day. And there's a trading buddy out there. And if you're watching this video, you know who I'm talking about, who traded yesterday and probably got cut up. He was kind of starting over. NFP day really isn't the best day to start over. Um, and when you're having difficulty, sometimes you need a guide to show you the way. I mean, some people can navigate through the woods on their own, but some people, sometimes they just need a guide to, show them the way. Once they know the way, when they come back the next time, they don't need the guide. So hang in there. Don't give up. Fellow traders, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And once again, always have your risk management in place, have your money management in place, and have your brain management in place. Because if you don't have the right attitude towards trading, it can be very frustrating, very painful, very stressful. So you've got to get this brain management down. If you wonder why, see that gray matter, that's why that's gray, in case somebody wanted to know why that was gray. Okay, weekly wrap up. We filled all the gaps. We did that a long time ago. And the pound has made a very large reversal. It's now 133 pips above the open. So we're going to close, looks like we're going to close this week green. And there was something that I read on another, somebody else's thread. And they were saying that towards the end of the month and beginning of the month, there's a lot of big orders coming in, but it's not necessarily speculative trade orders. Remember, we're in the currency market. And so people have to trade their euros in for dollars or their dollars in for euros. So that's one of the reasons why I guess the last couple of days of the month, first couple of days of the month, things can get pretty hairy, and especially usually near the beginning of the month, we have that NFP Friday. So that's just something to be aware of. And then, like a day like today, the day before a holiday in the US, trading just slows down. I guess most of the New York traders are up in the Hamptons or somewhere. Okay. Once again, here's the first day of the week. You can see we're back inside that range. I'm sorry, first day of the month. We're inside that range. The first day of the week, we're outside the range. So how is this going to help you? Well, we know that price ranges, and we know what the monthly range is going to be, or what it should be in terms of range, in terms of the number of pips. And when we look at that range, we can pretty much make a safe bet that sometime over the next, 20 some trading days or 15 some trading days, price is going to either come up here or go down there, or possibly a little of both. I mean, it just pretty much has to. So in fact, I'm going to work on an indicator based on that idea if I haven't already created it. Sometimes I've actually written the same indicator more than once because I forgot I had written it years ago. But it has to do with the ATR, average true range, or ADR, average daily range, or just the range. It couples along with the smart range, which I can, maybe I'll just skip on over to that chart since I'm already talking about it. So here we're looking at daily and H4, but I've got these set up to look at the current. So let's look at the monthly range right now. It's at 170 pips. That's only 1%. It's in the 1 percentile. That means over the last 100 months, it looks like there was only 1 month that was 170 or less. So chances are it's going to be a little bit bigger than that. You can see here at the 41 percentile. Actually, this might be the lowest range. I'll have to check to see if the indicator calls it. I think it would say 0. So yeah, so there must be at least one um, at this level or below. So monthly range at the 1 percentile. And what that means is over the last 100 days or 100 months, there was only 1 month that had a range of 170 or less. So this is why this is called smart range, because it tells you what the percentiles are. So you don't have to go into run the frequency distributions and look and see where it falls in that frequency distribution. Even though the frequency distribution is still valid, because let's just say, for example, most of the months were 400 pips. Let's just say most of the months are 500 pips or below. Then we know once we reach 500, it's probably a good time to start thinking about exiting the trade or possibly looking for a reversal. And so you can see here on the monthly chart where the month is so far compared to last month's high and last month's low. Maybe it breaks out of last month, maybe it doesn't. Maybe this could be an inside bar month. It could be. It's summertime. Traders are taking time off. So just keep that in mind as this month unfolds. Up for the month, up for the week, up for the day, down for the year. There's the inside bar here 13 weeks ago. That occurred 13 weeks ago. You can see where price is. There's that daily inside bar 26 weeks ago. Monthly inside bar 3 weeks ago. Once again, there's no pairs with the range over 100. It's just one of those days. Even the new beast is clocking in at 92. That's the pound New Zealand. Buy zone here, we had the pivot, hit the pivot, hit a miss pivot, all on the same hour. So once again, from pivot to pivot there, trades being taken out. And once again, these pivot levels, if you've known me for years, some of you have, you know I don't like magic numbers. You know, what I mean by that is these numbers based on some calculations that are supposed to have significance. And because to me, a lot of times it's kind of hocus pocus, but there is a reality. There's lots of traders that use pivots. Supposedly, the banks use pivots. So they move the price that way. So knowing that, you can use that to your advantage. It's not that I believe in pivots. I know other people believe in pivots. And I know from statistics, as I show you just about every day, that those pivots get taken out. Okay, we've got a 48 pip range here. There's really not that much motion here on the rat. Let's put that back to H1. You can see here, it's really not. After this put in, you can still trade it. So here we have some H1s opening in the green rat area for some pips. And this wasn't a rat trade from the red zone because it hadn't put in that low, so the range wasn't big enough. Why? I've got the rat zone here. That's interesting. I wonder what this was about. Oh, so we don't need that chart. Pivots, once again, took out today's pivot. And you can see now we only have one missed pivot this month, 2 from June. And if you see the label, that means the pivot's missed. No label, pivot was hit. Wick zone, in and out, just crossing. So for those of you who don't mind taking 2 to 5 pips per trade, as you can see here, crossing these lines, there was pips to be made. And I've already gone over this chart. Looking at the H4, one other thing, I'll pass on a little nugget. A lot of times when you trade, you can get fixed in, and say you're trading on the 1 hour chart, you can get fixed in to what price is doing. And price is the same on all charts, but once again, price is relative. So if the H4 is green and the H1 is red, you are kind of trading against a flow. And it's one of the old rules of thumb. If price is above the daily open, you want to look for longs. If it's below the daily open, you want to look for shorts. Up until price ranges. In other words, we go back to that range. So, if price ran a range of 80, it's at the 81 percentile. So I believe price ran up, ran down, and came back. Or maybe it went down first, then went up and came back. So once this hit 50, 60, that's when you can start looking for those reversals. Now, yes, it could be at 60 and it could continue on. But what you don't want to do is look for reversals, say, when price is only at the sitting at the 27 percentile. And I hope that makes sense to you, because back in the day when I think it was that Dr. Severian, when this was when the pound was doing 150 pips a day and the euro was doing over 100, where you'd look for price to hit 100 before you do a reversal, because it's real easy to get cut up. So for example, price could be going down and then suddenly reverse, and then it's making a top and you're starting to look for it to reverse off the top, but it just keeps pushing on and on and on. Well, it's already reversed off the bottom. Now it's pushing out that range. So, if you're sitting somewhere between 40, 50 on the percentile, just be careful of looking for those reversals. You get somewhere up in the 80 range, then it's a little more safe. So I would just keep that. And then depending on the pair that you're trading, that these numbers, these percentile numbers may slightly differ. So if you're trading something that has a smaller range, it might not reverse until it gets into the 90s. You just have to trade the pair that you're trading and learn those numbers for that pair. That's why I can't give you a broad based, well, this is what you do, and then you try and do it on all pairs. No, that's why we run statistics, so we know what the pair we are trading does. So once again, simple price action, beginning traders, and any trader struggling, just trade with the H1 candle color at the line. So that's it for the weekly wrap up. I hope you had a profitable week. Hope you have a nice, fun, safe weekend if you're out there on the holiday vacation. But just remember, it's not what you trade, it's how you trade it. So drain the banks.